All right, good morning, traders. Today is November 21st. It is a Friday, 2025. My name is John Carignan. I am the lead instructor here at the BYOB Trading Room. That is the day trading service for the hit and run candlesticks family. All right, so let's take a look at the markets. I want to thank everybody out there, podcast land, digital land, cyberland. Thank you for following and liking my content and being a part of it and leaving kind comments. Like that a lot. Special shout out to those that share it. John Jordan, Bob Jordan, Kathy, Sarah Roasted. Thank you for sharing the content. I appreciate that. Helps get the good word out there. Thank you so much. All right, let's take a look at this morning. Oh, got some announcements. All right, Black Friday sale. You can get it now. The link is in the description of the video. You'll find it. You just got to scroll down, see it in the description. Black Friday lifetime membership, $39.95, regularly about $10K. The other sale is an annual subscription for $1,205. That's 12 months subscription for $1,205, and you get an extra 6 months for free on top of it. Okay, so for the price of 12 months, you get 18 months. All right, so that's the annual. You pick up the annual. Again, the link is in the description if you're interested in picking one of those up. All right, now Thanksgiving. All right, we're not going to be open Thanksgiving Day, so that's next week. It's right around the corner. So Wednesday, half day. We close at noon. Thursday, of course, that's Turkey Day. We'll be eating turkey. Trading rooms are closed. Friday, Black Friday, all right, markets are open till 1. We're not going to be open at all in the trading room, okay? And then, of course, Saturday, Sunday, and then we come back. It's Cyber Monday. We will see you on Cyber Monday when we get back, all right? So trading rooms close Friday. Trading rooms close Thursday, half day on Thanksgiving Eve. All right, that would be the day before Thanksgiving. All right. So my SPY pivot this morning, 657.55. Above it, I'm a bull. Below it, I'm a bear. All of the Fab Five made outside. Okay, bearish engulfing candles, closing under bearish traps and under their 17 EMAs. So they all made higher highs and lower lows. Okay, SPY closed 2-hour downtrend and a 10-minute downtrend. Gold in a daily uptrend made a lower high and a lower low, closing inside a bearish trap but over the 17 EMA. Silver in a daily uptrend as well, made a lower high and a lower low, closing under a bullish trap over the 17 EMA. USO in a daily downtrend still made an outside bearish engulfing candle, closing under a bullish trap and under the 17 EMA. UNG in a daily uptrend made a lower high and a lower low, closing inside a bullish trap and over the 17. US dollar index remains in a daily uptrend but still in that bear flag and closed near the 100.21 area. SPY max pain for today, 660. A put to call ratio, 2.7 puts for each call that expires today. It could get very wild and whippy today. We have a put squeeze on the table. We have max pain is 660, which is above us. We have a 10-minute uptrend. So we may get a squeeze up to 660 this morning, causing all the puts to buy calls. So we could see a rapid rip early this morning. We'll see what happens, okay? Being since we have a put squeeze available and the max pay number is above us. So we'll see what happens with that. All right. Oh, yeah. If this is your first time seeing this, all right, these under here, under the bulls, these are all in daily uptrends over the 17 EMA. Okay. If this is your first time seeing us, these are all in daily downtrends under the 17 EMA. Okay. If they got a little star they're building out a bull flag or a launch pad from which to launch higher. If they got a little star over here, they're building out a platform, all right, or bear flag from which to dip lower. Okay, so I'll show you what that looks like, and I got a photo of it right there. Okay, so you can see price comes down. Wish I had my drawing tools. Let me see if they. I don't think they're gonna work. I'm just gonna start them all over. All right, and pick up the drawing tools. Okay, so you can see price moves over, down, and then over. So you can see it's building out a platform from which to dip lower right here. See that it's got a 1, 2, 3, 4, 5 candle hold, holding the lower ground right here. Usually this is a bear flag, so you see price, all right, has come down, and now it's going over, all right. Now what happens is, kind of explaining this yesterday, they linger here too long, and what happens is investors get kind of spooked, all right, and no one wants to be the last one, when holding the stock when the music stops. So what happens is they begin selling, and then selling begets more selling, and then all of a sudden you're moving down to find support again at a lower number. Okay, so we'll see what happens. There is the bearish platform that is being built. It's a bear flag. All right, so if we look at this, all right, I'm going to take those off. Now I'm going to use lines. Okay, so it's a move down. All right, and then I'm going to use a box to encompass that. All right, with a bear flag. All right, and typically what happens is you linger here too long and people get spooked, and then you get another move down lower. Okay, so that's where we're at right there. Okay, bear flag. So when they got the star next to it, that's what they're building out, a platform from which to dip lower. All right, let's take this out of the way. Let's go take a look at the markets. Okay, move that. Okay, on close, okay, this is the shaded section. So this would be the post-market. This would be the pre-market over here. Okay, so you can see right here we left off. See the 3 EMA, which is that yellow line. Okay, so we had a 10-minute downtrend coming into the close yesterday. Okay, notice the 3 is underneath the 8. Okay, and the candlesticks riding underneath the 3 or right on top of the 3. All right, 3 in the candlesticks riding underneath the 8. 8 riding underneath. See the red dots? That's the 17 EMA. I'm on the 10-minute time frame. So we've got a 10-minute downtrend riding into the close right here. Okay, 10-minute downtrend coming into the close. All right, on the 2-hour chart. All right, I'm going to pick a cleaner chart. Okay, so here's our 2-hour chart. You can see, again, candlesticks, all right, and the 3 underneath the 8, all right, so we have a 2-hour downtrend coming into the close as well. Let's take a look at the daily chart. All right, daily chart, this would be yesterday's candle, this huge red one. So it's a bearish engulfing, all right, so we gapped up. We had some NVIDIA earnings, kind of juiced up the market. And with the NVIDIA earnings, we sold off, all right, all the way down to make a lower low. So we made a higher high. We opened up here, and we made a lower low. We closed underneath a bearish trap, underneath the 17 EMA. Okay, now, big candle today. We need to see follow through. All right, remember this? Remember about a month ago? Okay, no follow through. What happens? The bulls got inspired, and they turn around and produced, a new all-time high up here, okay? So we got to see follow-through today, all right? If not today, all right, it's got to be Monday, okay? It's either got to happen today or Monday, but we need to see some follow-through. In other words, more candles closing down here, okay? Without the follow-through, it's just one big red candle. just like this one. One big red candle, that's all it is. All right, and then we turn around, we made, look, a new all-time high. All right, so we got the bookends here. Big red candle, big red candle. All right, question is, we're going to get the follow through today. We'll see. All right, we left off yesterday with 2-hour downtrend, 10-minute downtrend. Daily is in a downtrend because here's a low. We made a lower low. If there is a rally today, all right, my first target is obviously going to be the pivot, all right, which I think is like 557 something around there, all right, and then my target after that is going to be 660 if there's a rally, all right, 660, because that's a big fat whole round number right there, and then of course the valley low right here between the two peaks, okay, so right there, 661.29. So those would be my targets if they decide to produce a 10-minute uptrend, which I believe we have one going on right now, okay? So we'll see what happens with that. Going back to 10 minutes, you can see price action here, okay? So got a little 10-minute uptrend happening right now, all right? Notice that's where the market high is, and they're producing candles up over it. Actually, this is like a little MMRP right here. See how price is going down? Got an igniting candle that breaks through resistance. Okay, this would be resistance right through here. Then they come back and test it for support. All right, and then I'd be looking for 1, 2, 1, 2, 1, 2 candles coming up to the upside. All right, I don't know how far they'll get, but I think 657 is my pivot, so I imagine they'll probably work their way up to 657. If they climb on top of that, of course, then I can be a bull. But we have a 10-minute uptrend. You can see right now in the pre-market. All right, we've got candles up over the 3. All right, candles on top of the 3. The 3 EMA is pointed up. Candles in the 3 over the 8 EMA. 8 EMA is pointed up. All of them are over the 17 EMA. That's pointed up. And they're on top of VWAP. All right? So we'll see how far they get, if they can dig out a higher high. So here's a high here. We obviously made a higher high. There's a high here. We made a higher high, but is it significant? Not sure yet. So we'll see. All right? So the first high to take out would be when the market is open, and that would be this high right here. Okay? So probably going to get up around, about 658.27. Challenge that area right there. Okay? Look for them to challenge that 658, that 58.27, 58.10 area right there. If they get above that, then you're going for, this VWAP line, right? Which you can see is right at the same place as I called out earlier. All right, which is right at the pivot between the two peaks, which almost there, not quite, but so we got ourselves a little 10-minute uptrend, all right, in the pre-market right now. All right, so there's a 10-minute chart. Let's hit the game plan, see what we got going on there. I'm on the 10-minute chart. I got green erases red. Okay, right up over, see this wick? Remember the swords I was talking about yesterday? Well, here's the double swords. Okay, got one here, another one here. Okay, so if price gets on top of those swords, all right, the double swords, 1, 2, I was talking about swords in the e-learning, all right, that's a green erases red entry over 662.40. Okay, 662.40. Pivot 657.55. Above it I'm a bull, below it I'm a bear. Red erases green underneath 651.60. All right, that would be my red erases green. See, that's where we left off. That was our low of day yesterday. Okay, notice we got underneath it, and we really didn't make any significant lower lows right there. Actually, we didn't even consolidate underneath it. So you can see we could be going back. Could be a big waffle day. Again, gap fill is down here. We'll see if they're going to go for gap fill after they hit the pivot with this bullish 10-minute MMRP. All right, looks like they're probably going to go up here, hit the pivot. I don't know if they're going to turn around and come back and do the gap fill thing. Again, like I said, the put squeeze is on the table. So in order for the put squeeze to work, they cannot lay up, give them a pullback from which to double down and get out on. Okay, can't do that. All right, they have to keep the constant pressure going up. So we very well may get, it's a possibility, all right. Usually doesn't happen on a Friday, all right, but there's a possibility we get a trend day. Usually you don't get a trend day on a Friday due to all the options, and the market makers are going to try to inflict max pain or profit as greatly as possible with all the options that are expiring. So they tend to go after those numbers. So we'll see what happens. So 660 is up here. All right, so that's over the pivot. So that would be, like I said, that's going to be my target if we got a 10-minute uptrend when the market opens. So we'll see what happens with that. All right, so if we're at 660 when the market opens, we still got the put squeeze on the table. It could very well go all the way up to 662 or higher, all right, because we've already hit the max pain number. Now we got to do is inflict the put squeeze, which will drive it up even higher. So there's a possibility we drive all the way back up to the 50% mark of yesterday's huge candle, all right, which is, well, right up there at 664. All right, so just saying, there is that possibility, all right, that if we're at 660 when the market opens, they're gonna, market makers probably going to want to inflict the max pain put squeeze and see it flush up even higher. So there's a possibility to get 664 today. We'll see what happens. All right. Remember, we started out down here in the pre-market at 651. That's a pretty good size move. You can see we're getting a whole look at the 10-day ATR, $10.60, and because of that, we're getting a lot of overpriced. They're really not overpriced. They're actually priced perfectly. It just makes it. I don't like it when they're that high. It's kind of it's costs more. All right, and with the theta decay, it makes it very tricky. I'm got to constantly work my strike and change my strike after each move up in order to stay ahead of the game and the theta decay, because they start out at such a high number and they eventually all go to zero. That is, if they're out of the money at closing time. You see what I'm saying? All right, so I like 7 days and 14 days till expiration Friday options on the multiple of 5, specifically for the open interest. All right, the open interest would be the liquidity. I trade strikes $2 to $15 out of the money. Usually it's $2 to $5 out of the money, but because the 10-day ATR is $10.60, I have to go up a little bit higher to reach my comfort zone. So my comfort zone for me in options is right around 30 cents, from 30 cents on up to about $1.20, $1.30. I really don't like going over $1.30. Okay, I rather trade under $1.30. Preferably, I like the 30, 40 cent. They're easy for me to defend those, so I prefer those. Okay, right now, because we've got such a lot of premium priced in. All right, I tend to trade strikes that are $2 to $15 out of the money. Like I said, I really like 2 to 5, but I got to go where my comfort level is. I trade 10-minute uptrends over VWAP. I trade 10-minute downtrends under VWAP. Currently, 2-hour was in a downtrend at the closing time. Yesterday we did have a brief window of 2-hour uptrend, but we lost it. All right, right after we rolled over here. So we'll see what happens. All right. So my favorite trade, okay, I'm going to say it again because it is my favorite trade. My favorite trade is the 10-minute uptrend over VWAP that resides inside the 2-hour uptrend, okay? We don't have a 2-hour uptrend yet, but they could produce one, okay? So today, inside the 2-hour uptrend that resides inside the daily uptrend. We don't have a daily uptrend either, but they could produce one, okay, that resides inside the weekly uptrend, inside the monthly uptrend. So the weekly and the monthly are still in uptrends, but the daily and the 2-hour are not, okay? And if you remember back in the videos months ago, I said it a lot too. I said, treasure this time, because this is when we were working up and making the new all-time highs, because in the future you're going to have days, maybe even weeks, where you don't have 2-hour uptrends and daily uptrends and weekly uptrends and monthly uptrends at the same time, okay? So hence, this is one of those days I was talking about that we might get the 2-hour uptrend over VWAP. Yeah, that's good, but we don't have the 10-minute uptrend over VWAP. We got that. Yeah, that's good. But we don't have the 2-hour and we don't have the daily. Okay, so I was saying, like, in the future, you're not going to have that. All right, it'd be nice if you do, but you probably won't have that, 2 or 3 months from now. Here we are about 2 months later, and we're seeing the same thing that I kind of said, like, take advantage of this when it is, all right? So again, my favorite trade, 10-minute uptrend over VWAP, okay? What is a 10-minute uptrend? Candlesticks riding on the 3, okay? Or over the 3 or on the 3. 3 in the candlesticks over the 8, all right? 8 over the 17. That's the green dots, okay? And preferably over VWAP. That's this brown line that strikes down here. And we're currently over VWAP right now, okay? So that's my favorite trade. That resides inside the 2-hour uptrend. That resides inside a daily uptrend, inside a weekly uptrend, a monthly uptrend. And it's even better and best when it's over the all-time high anchored VWAP. Okay, so that's, for me, that's the ultimate trade, okay? Because you're going to have all of the bigger time frames supporting your little 10-minute uptrend. Okay, that's like the ultimate, all right? That's like having all of the wind in your sails, all right? In glassy waters in front of you, okay? So that's my favorite trade. Now, not going to have that today, but it could manifest maybe late today, maybe on Monday. We'll see what happens. Again, big red candle yesterday. They need follow through. So I'm not seeing the bears show up yet, not in any significant way. So we'll see what happens, all right? I'm sure they're roaming around here. We saw them roaming here. See the double swords? They're definitely roaming in this area. So we'll see how far we get today. Okay, so there's SPY. All right, let's take a look at QQQ. QQQ, okay? Same thing, all right? I like 7 days and 14 days till expiration Friday options on the multiple of 5, specifically for the open interest and the high liquidity, okay? Trade strikes $2 to $15 out of the money. Again, we've got, look at the 10-day range. That's huge, $13. Remember, the SPY was only 10. $15 10-day range, all right? That means the average daily move is going to be $15. That's huge. Okay, that's a lot. All right, I trade uptrends, 10-minute uptrends over VWAP, trade 10-minute downtrends under VWAP. Now, when it comes to SPY and QQQ, all right, if a 10-minute uptrend happens to manifest down here or right here where it is, all right, if it breaks the bullish rubber band candle on the 10-minute chart, all right, I'm interested in trading that, okay? Doesn't mean I have to wait for the green erases red entry to trade my 10-minute uptrend. Okay, I can trade it from down here, but I just want to see it break the bullish 10-minute rubber band candle, all right, in order to take that trade to the upside. All right, so there's QQQ. Same thing for SPY. Now, if a downtrend happens to manifest up here, or here, long before it gets to the red erases green entry, which is under this red line. Okay, remember before I was telling you about uptrends, all right, taking them long before they get to the green line up here, or the green erases red entry. Okay, long before the downtrends get to this red line, I can take them, but again, I would like to see a break of the 10-minute bearish rubber band candle on the bottom side, okay? So I don't have to wait to take a downtrend for it to be under the red line in order to take it, okay? It just becomes more powerful when it's down there, but I don't have to wait, okay? But I do need to see a break of the bearish rubber band candle, all right, in order for me to take that trade to the downside, okay? So there's QQQ, there's SPY. Let's look at QQQ 10-minute into the close. Okay, you can see candlesticks, the 3 underneath the 8 EMA, everything. Look at the 17, red, ever since the rollover all the way into the close and even in the post market. All right, so 10-minute downtrend coming into the close, 2-hour chart. Right here, you can see the candlesticks and the 3. Okay, see here's that brief window of time where we had 2-hour uptrend. See that right there? The 3 was actually, and the candlesticks were over the 8. Okay, and then this happened. Okay, so now we're under, see this? Now we're under the 8, so 2-hour downtrend coming into the close yesterday. That's QQQ. All right, daily candle. We'll zip over here to see that. It'll be this big red candle. All right. All right, it's an outside day because it made a higher high and a lower low. It closed below the bearish trap. See the 3 EMA riding underneath the 8 EMA. Both of those riding pointed down under the 17 EMA. Okay, so we got QQQ, SPY, okay, making lower lows. So closing under bearish traps under the 17 EMA. Okay. So they're still up there in quadrant 4, both of them, all right? But, you know, they lose the upper third, they're no longer going to be bullish. Right now, they're still bullish, all right? But they're not doing the right stuff. They're not moving up, okay? Don't even have, well, we just started, we just started a 10-minute uptrend, okay? Let's not get overhyped, all right? This thing could last 2 candles and then roll over. All right, but we started a 10-minute uptrend. Okay, right now, you can see constantly got a low here, below the 17, making lower lows. So we're in a downtrend. So obviously not moving in the right direction for me to be a bull, even though it's in the bullish territory up here. Okay, so we'll see what happens. That's for both QQQ and SPY. FNGU, same deal. Okay, it's this big red candle. Now look at FNGU. Okay, that's it's darn near got lucky, closed in the upper third, but let me just say, any lower, closing any candles any lower here, all right, and yeah, we're no longer bullish. We'll be neutral down here. Okay, so there's FNGU on the daily chart. You can see bearish engulfing candle, closing underneath a bearish trap. Underneath the 17, underneath, see this pink line, all-time high anchored VWAP. Okay, still bullish, all right, not in bullish territory, but, okay, let's face it, they broke major support, and they're in a downtrend, making lower highs and lower lows down here, and they're tackling the upper third line, all right? That'd be the top of all these wicks here, okay? So any lower than that, they close candles there. They're no longer bullish. They'll be neutral. So they're on the edge of being bullish right there, okay? And in a downtrend. Obviously not doing the right stuff, okay? Right there. They had hope yesterday when they gapped up here and they challenged the all-time high anchored VWAP. See the pink line, see the wick, all right? There was hope. All right, but it quickly faded right there. There's FNGUs. Take a look at Diamond Dow. Big red candle. Okay, again, still up in quadrant 4. Remember, this is the last big red candle. which produced, with no follow through, a new all-time high. Actually, two new all-time highs, one there and one there. Okay, so there's timing down on the daily chart, bearish engulfing, all right, with lower low closing under bearish trap under the 17 EMA. Still bullish up here in quadrant 4, but in a downtrend, okay, not doing the right stuff. Okay, even though it's up here, it's got to be moving up. Okay, so there's diamond down. IWM right here, lower high, lower low, higher high, lower low, closing under the bearish trap, under the 17. Again, here's another one about to challenge the upper third line. Still bullish right now, all right? But let me just say, they start closing candles down in here in the circle. No longer going to be bullish, going to be just neutral in this area right here, because they won't be in the upper third. That's my parameters. In the upper third, bullish, okay? In the lower third, bearish. Anywhere in between, neutral. So there's IWM. Also, you can see the lows, okay? You can see the lower high, and we're digging out lower lows. So in a downtrend right there, IWM. Let's take a look at silver and gold. Both are in uptrends. Okay, yesterday's candle, daily, lower high, lower low, closing inside a bearish trap, but over the flat 17, but underneath the all-time high anchored VWAP. In the middle of quadrant 4, and in an uptrend. All right, so bullish and still in an uptrend. Silver, like I said, still in an uptrend. All right. Lower high, lower low, closing under bullish trap, but over the flat 17. This candle down here breaking this low will put silver in a downtrend. Right here. See, this is today's candle. All right. As of without this candle, it's an uptrend still, but this candle down here, excuse me, it's going to make it a downtrend right there. All right, because they made a lower low. See, here's a low. They'll make a lower low. So currently, with this candle showing, it's a downtrend. Before this day started and yesterday ended, we still had an uptrend. Again, in the middle of quadrant 4 is bullish and starting a downtrend right there on silver. UNG. UNG still in an uptrend. Got a high. They made a higher high. It got a low. They made a higher low. Okay, so they're still in an uptrend. And they're challenging the 2025 high anchored VWAP. All right, took them all year just to get up there. Currently, price is holding the higher ground, which is not typical for UNG. Typically, they just give it up. So they're in an uptrend, but they're still in the lower third. So they're bearish, but in an uptrend currently. There's UNG. USO. USO in a downtrend. They keep making lower highs. See right here, lower highs. And you can see they keep making, here's a low, making lower lows. So they're currently in a downtrend. And you can see here is the green downtrend line. And they seem to have quite a bit of respect for that right now. Okay, so USO in a downtrend, not in the lower third, not in the upper third, so just neutral right here. Let's take a look at our technicals, then we'll hit the economic report. T2101, all right, remember we moved down yesterday. Guess what? All right, market breadth, market participation increased on that move down, okay? So not what I wanted to see. I wanted to see increase when market moves up. But now when the market moves down, we're getting more and more participation here on T2101. T2122, okay, had a huge rally up due to the NVIDIA earnings, but we quickly lost that. We were in the buyer's chop zone. We almost tried to break into the buy zone up here. You can see we made a little micro higher low right there. There's a low. We made a little higher low right there. All right, and then we made a little micro higher high, and then after that we lost it, and then we made a severely lower low, taking out this low, that low, and all of these lows right here in this head and shoulders pattern right there. All right, so you can see T2122 closing inside the oversold zone down here. That doesn't mean we're going to reverse, okay? Just because we closed in the oversold zone, it doesn't mean like today's going to be bullish, all right? Today is bullish so far with the 10-minute uptrend, but just because we're in the oversold zone doesn't mean everything's going to start moving up now, okay? It's not the way it works. It could camp out here for, 2-3 days, maybe even a couple weeks, okay? But it is moving out of this area this morning in the pre-market, okay? Market hasn't opened yet, all right? Could have a whole new look once the market opens, so we'll see. T20, 2123. Okay, this is the support line from the head and shoulders pattern over to the left. Okay, again, we're in a downtrend. We're underneath the 200 SMA. Again, neither one my favorites. All right, unless I'm a bear, not a bear. But anyways, price making. You can see the consolidation. Remember, I was telling you about how we linger here too long without going back up, and what happens is selling begets more selling. See, this is exactly what I'm talking about. Okay, so you come down, you linger too long without making a new higher high. All right, and then selling begets selling. Okay, then we do it again. See how you linger here way too long. All right, investors get spooked and they don't want to be the last one, standing when the music stops. All right, in other words, they don't want to be the last ones to sell. So what happens is selling begets more selling, then you get a flood even further down. Okay, now we got to pull back up over the 200 SMA. Again, not powerful enough to make or produce a higher high. Okay, and then you get more selling, failure to make a higher high. So now that puts us down here into support, all right, under the 200 SMA. Wanted to show you that because I showed you that bear flag earlier, how you linger too long in the bear flag, and what happens is selling begets more selling, and then you wind up causing that breakdown move that comes from the platform or the bear flag in some securities. Okay, so there's T2123 15-minute chart in a downtrend and bearish on the 15-minute chart. On the 3-bar chart, see how we're just barely holding. Here's the quad lines. I'm going to take this. I don't know why that is up there. You know what? I'm just gonna edit it. All right, because it's kind of confusing right there. All right, so here's the quad lines right here. Okay, so you notice this would be the upper third. That'd be the bullish area. Okay, this would be the bearish in the lower third in here. In the middle is neutral. Okay, so here's that head and shoulders pattern. That's a bearish head and shoulders. Okay, the only way to negate the head and shoulders pattern is to decapitate the head. No head, you have no head and shoulders pattern. And that's what they did. They went up and they made a higher high. Okay, so making that higher high negated the bearish head and shoulders pattern. Now we're looking at a bigger head and shoulders pattern. This, the all-time high being the head, this being the left shoulder, and these being the right shoulder. We'll see what happens. Again, the only way to negate the bearish head and shoulders pattern is to decapitate the head. We'll see what happens. Okay, so here's support. You can see it was support. We bounced. We got up on top and held. We went up and rolled over, found support, went up and rolled over, found support, and then we rallied up out of there to make a new all-time high. Okay, so here we are again. Same location. Okay, so coming down. Will they rally up out of here? We'll see. We got a 10-minute uptrend into the market open. I don't know if it still exists. but that's what we got so far this morning. We'll see. On top of that, we got the put squeeze, all right, and then we got max pain 660 up above. So we could see price rally up out of here today. There's a possibility of that. Okay, but on the 3-bar chart, okay, you see that's the all-time high, lower high, lower high, lower high. So making series of lower highs. Here's a low right here, higher low. If you came from here up to here, that's a higher low. Okay, now this is a lower low because that was the last low, lower low. All right, and then even lower low, produce a lower high, and now we got lower low. Okay, again, underneath the 200 SMA, not my favorite place to be unless I'm a bear. All right, so there's T21, 23, 3-bar. Still trying to remain bullish up here and in a downtrend, so not doing the right stuff. Okay, let's go look at FNGU. Now they were up. They were on top of the 200 here yesterday morning, in the morning hours, early morning hours up here. And you can see how quickly they lost it, and they produced lower lows. So they're still in a downtrend right here on FNGU. And they are breaking all of this major support right through here, which is all of this consolidation, all the valleys here, all of this consolidation. That's the major support, and you can see we close candles. This is the spike candle, and we close candles even lower, way down here. All right, so not a good look for FNGU. They need the bulls need to rescue the price and get it back up here and consolidate. Otherwise, looking like coming further down. All right, that's FNGU. Let's take a look at the economic numbers, and then we'll call it a day. All right, for max pain, you can see 660, 2.7 puts for each call. So put squeezes on the table on the dollar. Okay, you can see we've got a low. We make a higher low. Okay, we got a high. We make a higher high, higher low right here, that wick, that tail, and then a higher high, then another higher low. We'll look for the bulls to be inspired to make the higher high. Now, this is the bear flag that we're in right now. We're in a big zoom out. Okay, see price moves down, and we're in this bear flag right now, but kind of getting that rounded bottom look right there. So double bottom here. So we're still in the bear flag, but we're in a daily uptrend right here, making higher lows and higher highs. Okay, they could rally on up all the way back up here. We'll see. All right, but that's where we are right now. We're still in the bear flag. All right, but in a daily uptrend. Okay, economic calendar for today. We've got PMI composite flash at 9:45, consumer sentiment at 10, wholesale inventories, and that's the delayed report, comes out at 10 p.m. and a rig count at 1. That's it for this morning. A lot of delayed reports, being since the government reopened, we're getting a lot of data that was supposed to be given to us earlier last month or earlier this month. But we haven't been getting that data due to the government being shut down. So now we're getting what we call delayed reports. All right, so there's the economic calendar for today. Earnings. Let me see if I can find earnings right here. Okay, so we had NVIDIA report Wednesday night. Big boy, I think Home Depot, somebody big, reported yesterday. I think it was the big guy yesterday. Walmart reported yesterday. 800 billion. Okay, 850 billion. Okay, almost near a trillion. Okay, they reported yesterday. I think they got some good numbers. Friday, who do we got? BJ's Wholesale. Again, nothing but familiar names. Nothing here is going to move the markets. They may help out their sectors, but I don't think any of these are large enough to really sway their sectors up or down. All right. So we'll see what happens. All right. For today. That's it. I will see you all in about 30 minutes and we'll open up the markets.